And we are back. Financial 15, Kevin and I are ready to go. Continuing our Becker Orr Original Series on cryptocurrency. We've talked about a couple of items now. We're going to jump into decentralized finance. This will be an introduction to DeFi, a beginner's guide, if you will, to the DeFi space. Lots to cover. You're going to want to stick around.
Yeah, as Clint mentioned, this is the third episode in our cryptocurrency series on a Becker Orr Original. If you want to find anything more, please go to our website at beckerorr.com or go to our YouTube channel or like us on Facebook. We've got everything that you need there and more if you want to take a look at what's going on. So, Clint, basic thing, DeFi for beginners. What is DeFi?
Decentralized finance. Well, a good starting point, in my opinion, is to think about it as a spectrum. You've got traditional finance, which we all know, that's kind of what we do day to day for the most part. You got your big lenders, you've got the life insurance companies, the big stock exchanges. You can see ICE there on the traditional finance spectrum. ICE actually owns the New York Stock Exchange. And then on the complete other end of that spectrum, you have decentralized finance, often called DeFi. And then in between the two, you've got centralized finance, what they call CeFi. We'll get into the differences, but I think that's a good starting point, Kevin. Would you agree that we got to think of it as a spectrum going from fully regulated and centralized to complete other end where it's unregulated and completely decentralized?
Yeah, it's a perfect place to start because a lot of people have no idea what the decentralized finance scenario is. Everybody's fairly consistent with what traditional finance is and how to do it. And again, moving through central finance as well as decentralized finance is perfect. But yeah, all these acronyms, we're going to have to make sure we keep on top of everything so people know what it is. So why don't we start and get into what DeFi really is? That's the most important aspect of what we're dealing with.
Let's start there. Start at the left end of that spectrum, completely decentralized, getting into DeFi. Simple question, what is DeFi? If you want kind of a one-sentence answer, I think that would be it. Financial services without centralized authority. Think about it, insurance without insurance companies. It's trading without exchanges. It's lending without banking. They're taking away those intermediaries. And it's not too much of a stretch if you think about it. The world's largest hotel company is Airbnb, and they don't own any hotels. Largest largest taxi company is Uber. They don't own any taxis, so it's not too much of a stretch to think about decentralized finance being something that could certainly gain lots of adoption. So that's the starting point. I'll bring that up again. It's financial service without centralized authority, completely decentralized, peer-to-peer networks. And there's a few tools we need to make this happen. That's right, Kevin.
Yeah, and basically, I mean, this is part of the blockchain scenario, and we're dealing with smart contracts here. So, I mean, it's basically what we're doing is they're building the infrastructure for this entire decentralized finance highway. And this could be run on something along the lines of Ethereum or something along that line, which is the blockchain where you can start to do these things. And they're all run through, as we know, smart contracts. And smart contracts are basically a ton of algorithms that are out there, mathematical equations that allow this to happen. And let's remember, when we're dealing with this, should I say, cryptocurrency space, we are also dealing with a lot of differences in the way that you're going to deal with insurance, the way you're going to deal with any of the other sort of scenarios that are coming on. And with the smart contracts going forward, we want to make sure that we're getting the peer-to-peer scenario that we're looking at all the time. We don't have that anywhere else, but this is something that we need to deal with. What else on decentralized finance do we need to deal with?
Yeah, so a quick mention on decentralized finance. At the moment, it's pretty much, not exclusively, but a big portion is on the Ethereum blockchain. There are other cryptocurrencies that are trying to get smart contracts. You also have other cryptocurrencies that work in conjunction with Ethereum, and there's parts that are saying Ethereum is going to get an upgrade. So there's lots of development here, but at the moment, lots of the applications are being built on top of the Ethereum blockchain, and they're using these smart contracts to do them. So it's kind of this autonomous enforcement of the smart contracts. The algorithm says, all right, if I do this, this will be the outcome. If not, there'll be some sort of repercussion. So the smart contract enforces all the details there. And we'll go through a few of the companies here. You can see Aave at the top of the screen. Well, that would be lending. And it could be peer-to-peer lending, and the smart contract would enforce the terms of the loan. Uniswap would be an exchange where you could do trading, and Nexus Mutual would be an insurance provider, so you can get insurance without an actual insurance company. So it's an application using smart contracts on the Ethereum blockchain. And a key piece of all of this, Kevin, is going to be stable coins. because often people think, oh, Bitcoin, they think Ethereum, they think there's incredible volatility. We've talked about this in prior videos. These cryptocurrencies certainly can be very volatile. However, you're not forced to use that in any of these transactions. They do have stable coins, which are still cryptocurrencies. They're on the crypto rails, but they're pegged to often a fiat currency, sometimes to gold, but pegged to something else that's a little more stable. So you can use a more stable cryptocurrency, what they call a stable coin, while carrying out these transactions. So you can be trading the stable coins, you can get your lending, your insurance, you can use a more stable currency while doing these DeFi transactions. And we'll move now to give you an idea. This isn't exactly just new out of the blue. They've been using this for a little while, and there's lots of uptake here, but we'll run through a few pros and cons before we get there. Kevin, you want to start off with the advantages?
Yeah, exactly. I mean, so some of the advantages that this offers us are things along the lines of transparency. This is pure transparency because it's a peer-to-peer network that we're dealing on, because it's the Ethereum blockchain for a lot of this that's being built there. And again, also the same scenario that you've mentioned with those stable coins that are there. I mean, normally having that sort of or huge volatility because of some of the other cryptocurrencies, stablecoin allows that to become a little bit more in that sort of a traditional time frame as to what you can do with lending, what you can do with banking and things along that. Not only that, but again, one of the big things, 24/7 access. So the accessibility is there. It's not like I have to worry about being at the bank between 9 and 5, or worse yet, that Royal's going to reject me. There's a lot of other areas out there that I can go to and see along that line. By not having that centralized service, by not having as many people involved, it's faster, it's cheaper to be able to deal with. And it also gives you a lot of flexibility on the mix and match. Whereas here we've mentioned, beforehand, it used to all be in different areas. You go to Canada Life for one thing, you have to trade in an exchange like the New York Exchange, or you have to do most of your banking at RBC. A lot of this stuff can be mixed and matched either in one company or in a variety of companies on this chain. So it makes it a lot easier to deal with that. Those are some of the advantages that go along there. But advantages aren't the only things that we have to deal with. Just because it's a quick and new system, there's also risks, aren't there?
Yeah, DeFi is still in its infancy. It's certainly in development. Ethereum in general has been around for a couple of years and they've been building these applications on that blockchain, but still lots of bugs to work out. Think about it, they're in version 1 here. That'd be a good concept when we think about DeFi. So lots of bugs to work out. Smart contracts are not perfect. They're algorithms. They don't always cover every single item. Sometimes there's loopholes that hackers or bad actors can take advantage of. So they're still trying to work the bugs out in the smart contracts. And in general, I'd say this is still a speculative market. There's still a certain amount of risk involved. So if you're going to be using some of these DeFi applications at this stage, in the early adopter stage, I'd still consider it a higher risk transaction, so you'd have to be cautious there. But not to say that people aren't using it. I mentioned earlier that there's definitely picked up some steam. And this is from James Wang. He had a piece called Ethereum announces first quarter 2021 results. We won't go through each item here, but we'll simply let you know that there's been huge adoption in the last year. I mean, the transaction volume alone went from about 33 billion, which is a large number to begin with, to about 713 billion. So a big number there. You can see the transaction fees. They went from about 8 million to about 1.7 billion. So there's some big volume here, Kevin, some big numbers in this DeFi space on the Ethereum blockchain.
Yeah, I think we've seen this going forward. I mean, and again, we're not going to describe each and every one of these pieces, but you're seeing the acceptance coming in very fast. It's moving through. You're getting a lot more people that are interested in this space. You hear about how Bitcoin's done everything, and all of a sudden everybody wants to know about the whole thing. Is it just Bitcoin? Can we get onto what decentralized finance is? What is Ethereum? Everybody wants to know those sort of scenarios, and as the percentages show, that's been huge. I think another factor that's helped this out is the fact that with the COVID experience going on, there's more people at home that have had a chance to learn about this. So now all of a sudden, as opposed to having to go out and do all their traditional stuff, you mean I can do it all at home on this centralized network? Let's try this. Let's see where it goes from there. So yeah, I think this is proving that it is becoming much more of a scenario that we're going to see going forward, and it's going to continue to grow. But you're right, it's in its infancy for right now. While this sort of covers a lot of the DeFi space, if we move from DeFi, where do we go next to here?
Yeah, we're moving along that spectrum. So decentralized finance, we take one step towards centralized finance, and we get to BlockFi, to Coinbase, to the whole what they call CeFi space. So now we're kind of getting the best of both worlds, or at least an attempt at that. So it's not traditional finance. It's not completely decentralized. They do have intermediaries. It is centralized. There is regulation, but it's still in the crypto space. Some of the big companies would be Coinbase, would be BlockFi. BlockFi attempts to be a whole financial services provider. So you can get, for example, loans from BlockFi. You can do your trading with BlockFi. You can have an account where you store your, like a savings account, you store your Bitcoin, your Ethereum, and they'll pay you interest like regular savings. You can also get a credit card. They've partnered with Visa, so you can get a Visa card. You can go use it anywhere Visa is accepted. Now, it's in US dollars, so you'd be spending US dollars on the credit card, but there's a cashback feature where it pays you back rewards in Bitcoin. So again, they're trying to mix and match all the traditional financial pieces on a regulated centralized platform, but still having a foot in that crypto space. So that's BlockFi. What about Coinbase, Kevin?
Yeah, I mean, basically, that's perfect description. I mean, it's a good way for anybody to try and dip their toe into this sort of decentralized finance scenario without having to go completely into step off. And Coinbase is basically an exchange for a lot of this stuff. I mean, their IPO came out over the course of last year, and it was one of the largest IPOs ever coming around, with roughly 100 billion net market cap for what it did when it opened up. So it is showing that people are accepting this as something moving forward that's going to be there. And again, I mean, it gives you a lot of options to deal with, where you still sort of have that traditional feel, but you're now allowed to get that step in there. And Coinbase has been a huge factor going forward for it. I think BlockFi will be the same thing going forward. But is there anything else centralized finance-wise that you think we need to know about?
I think we covered their centralized finance, kind of the mid zone of that spectrum. So DeFi, completely unregulated, very decentralized. Centralized finance obviously is centralized, but it's regulated, but still on the crypto rails. And if we go right to the other end of the spectrum, to the traditional finance, what they call TradFi, that's kind of what we know nowadays. That's where you get your Royal Banks, your credit unions. But you'll notice I've added another, call it a column there. I'm not sure if that's a column. We'll call it a column. It's an incremental step. There's a few companies that have started to move from the traditional finance space and take a step towards the cryptocurrencies, a step towards that mid zone. And you got PayPal and Square, which are the payment processors that do allow cryptocurrency, particularly Bitcoin, on their platform. You have Visa, like I just mentioned, partner with BlockFi, and allows that cash rewards in Bitcoin. So we're seeing some of the big name stakes in the traditional finance space make incremental changes towards the cryptocurrency. Do you think we're going to see more of that going forward there, Kevin? How do you think that space is going to change?
Yeah, I mean, I think that's perfect description as to what's going on. Everybody's starting to realize that this is not just a theory that's going on anymore, that it's probably going to be around to stay. Whether it's going to be the dominant player or not, we don't know at this point, but you're starting to see that companies are willing to take at least a little chance in there to see exactly how it's going to work for them going forward. So, I mean, Visa can't be strictly stuck on the traditional. If people start going DeFi, they want a piece of that market. Sooner or later, you're going to find RBC, Canada Life are going to be the same way. And again, we started to see this even in other companies. I mean, Tesla took a look at this going forward as well. Right. Even though they're not listed as a financial company, they started to dip their toe into this scenario going forward. So I think we'll see traditional finance move in there. It may not be overnight, but I think you're going to start to see that coming forward. So that's a definite conclusion as to what we have to look at for traditional fi. Kind
right. And we don't know how this is all going to evolve. It's still early days. There's going to be lots of development. Maybe there'll be a completely different blockchain that'll kind of take over Ethereum's spot, or maybe Ethereum will get an upgrade and be even better and faster. There's still early days, lots of development. I heard an analogy the other day that I think is appropriate, and it kind of worked with some of our prior videos when we referred to cryptocurrency like the internet in the 90s. Well, when the internet came out in the 90s, it was kind of like Web 1.0, right? Companies were getting all their web pages set up. There's the start of e-commerce. And then you had the development of the smartphone, and you had all the social media that came out in their kind of mid-2000s. That was Web 2.0, where people started living their lives online on their phone. At least a certain generation did that. And then the idea is that Web 3.0 might be the cryptocurrency and the decentralized finance concept. Maybe that'll blow up and be kind of a third iteration of the web technology, but we'll have to see. We'll have to see, Kevin.
Yeah, I think that's exactly it. I mean, you mentioned some good, perfect points for it. And again, this is sort of a traditional thing as things move on, and generational if we have to go for it. Your internet scenario is basically who accepted the internet or the internet. It was the baby boomers. It was the Gen Xers. Now that we're moving into the crypto space, it'll be the millennials. It'll be the Gen Z guys that are going to drive this going forward. And who knows where we're going to go from there. But yeah, it's definitely in its infancy. It's something that everybody should take a look at just so you have an idea of it. But yeah, I think that's a perfect scenario to cover it all over.
Absolutely. And we're going to do a couple more videos. One more for sure. We're going to talk about non-fungible tokens, which is related. It's still on the Ethereum blockchain. See how that can take part. Or if you have other questions, other topics you want us to tackle, always visit the website. You can get the chatwithclintonkevin.com. We'd love to hear from you. Love to tackle your questions. So feel free to reach out. Any parting comments for everyone, Kevin?
No, I think you've covered everything perfectly. That's DeFi for beginners. If you have any more questions, please get in touch with us. Visit the website. We're happy to see you. Other than that, I think that's perfect for today.
Take care.